Hello, friends. I hope you're all doing good. Welcome back to my YouTube channel, Maitri Investment. So today's video, I'm going to recommend you the best performing five blue chip or large cap mutual funds. So I am not actually SEBI registered analyst. So please take this as video as an educational purpose. The ultimate decision should be made by you only. So, just to give you a brief background, what is large cap or blue chip mutual fund means? So, it's a mutual fund which will invest in the businesses which are actually well established and also got a very good market share. So it's actually called the companies who are actually have got a market cap of more than 20,000 crores will come under this category. Market cap means you may ask what is market cap. Market cap is nothing but company would have issued some number of shares, so into multiply by the current price, that is the market cap. you know so there are some big companies, like Reliance, for example. If you say it is actually has got a market cap of uh, 11 lakh crores. Similarly, if you go to ITC or something, it has got a market cap of actually more than 5 lakh crores. So if you go to screener.in and you can also search, so it will also show you, it's currently show you the market cap of more than 3,000 crores. So here also you can just put a filter, so that it will give you the companies which are actually having more market cap. So instead of 3,000, for example, if I give 20,000. If I run this query, so you can see these are all the big companies, where I can see 274 companies as of now, which are large cap companies. These mutual funds, these large cap or blue chip mutual funds will only consider the companies from this bucket of 274 companies. So that's why, since these companies are very big, you can see a lot of big names are there here. Because of that, this is very less risky, and also they are very less volatile. For example, if I give, for example, 1 lakh crores, you can also see these many companies. Those who have got a market cap. As you can see, this is the column which will give us the market cap. If I just put a sorting based on the highest, so you can see, I think Reliance is actually is around 15 lakh crores, and TCS is actually 12 lakh, HDFC is 11 crores, 11 lakh crores, like that. ICC Bank is next, actually fourth position. It is actually 6.46 lakhs, and then Infosys, Hindustan Unilever, Bharti Airtel, ITC. So these are all the very big companies actually in India, as you can see, based on the market cap. This is the ranking. So let me come back to my slide as I was continuing. So as I said, this is less risky and as well as less volatile. Even the market crashes, these companies will never fall down. That's what I want to say. So the first mutual fund which I'm actually going to give you the details is Mire Asset Large Cap Fund. So at the end of the video, I'm going to tell you the best performing or best recommendation from my side, and also I'm going to give you the reason why I'm recommending this mutual fund. Please watch the video till the end so that you will get all the information. So, for example, first one is the Mire Asset Large Cap Fund. So here the number of stocks which this mutual fund invested is 60, and also they've got a top 10 stocks. I mean, 55% they have invested into these top companies, and top 5 is 39%, and also the sector is 56%. So as you can see here, these are all the sector where it is invested. And also, I think, I'm not sure whether it is a rule by SEBI, but usually, as you can see, there is also category recommendation is there. Which out of this large cap, 27.96% categories of the companies are invested into this category. That's what it says. So as you can see, in the financial sector, it has invested 35% of the money has been invested here. Similarly, technology, energy, and I don't want to go into details, but this is how the sector is sectorial investment by this mutual fund. So the next one is actually the top, top 10 companies where this Mire Asset large cap fund has invested. As you can see, this mark as well, So this says that whether the from the last quarter, whether the investment remains the same as last quarter, or it's also reduced or increased like that. As you can see, Mire Asset Large Cap Fund has invested 10% of that assets, into this HDFC Bank and ICC Bank. Again, it's also kind of equal weightage. As you can see, this is also PE ratio. As I was saying in one of my first video, so P means price to earnings ratio. So the market, if they're earning 1 rupee, so the currently HDFC Bank is getting 20.97 rupees from the market. And same way, I think you can see here Bharati Airtel, I think 75%. It's one of the highest as in this companies. So these are all the companies. As you can see, these are all very very big companies, and they are, I mean, the chances are very, very less that these one of these companies will go down. That's why even if you invest in these kind of companies, you will always be safe. These companies are exist from so many years, and they will also be existing going forward as well. So the next fund is SBI Blue Chip Fund. So the number of companies SBI invested is 50, and yeah, again here also you can see the category and what is this invested. They are into financials again 27%, and this one is actually into automobile sector. They have given the weightage. In the earlier fund, actually they have given the weightage to technology, second position, and here the SBI Blue Chip Fund has given the automobile as the second sector, and next one it is given actually consumer staples. Within the existing sectors, they have to play around. These large companies, the companies who have got the 20,000 crores market cap is 274 companies. Out of that companies, only these funds will invest. So again, you can see here, since it is financial heavy weightage, this one are also actually given a more weightage to HDFC Bank and ICC Bank. So here, most of the companies, I mean, from the last quarter to this quarter, there is no change. You can see here SBA is actually, in fact, increased. In the earlier Mire, actually, they have decreased the weightage to HDFC Bank from last quarter. Each fund manager will have different kind of strategies and other things. That's why they will take a call. So again, the next one is HDFC Top 100 Fund. So here also you can see financials is actually has got 36%. Here, I mean, surprisingly, this is the energy sector. They have given 12% of the weightage, and third position comes the technology, and then the consumers staples. Yeah, and here also, they've got only 49 companies. Concentration risk. I mean, they are invested only into 49 companies. It's kind of a focus. So considering their amount of money what they're getting, it will be more than 20,000 crores or something. I will also show you in the last slide. So their money what is they're handling is too big. In spite of that, actually they've got number of companies are very less, so it's kind of a concentrated investment. So here also, as you can see, ICICI Bank, HDFC Bank, these are always there because these are very, very big companies in India. They've got so many branches. They'll be earning a lot of fees from customers. So they are quarter on quarter. They keep on growing. That's why these companies will never fail. So here also again Reliance, ITC. So here also they're not changed much in the last quarter. It's almost kind of a passive income, passive investment. You don't need to do much. Just invest in them and keep quiet, like kind of thing. Yeah, next company is actually Aditya Birla Sun Life Frontline Equity Fund. Here also, as you can see, the weightage has been given to financials, and next is technology and energy and automobiles. So here also, I mean, compared to the earlier mutual funds, this company has got actually more number of stocks. Here it is there, almost invested in 76 companies. So these are all the, again, top holdings. So here also it's not much change. HDFC, ICC Bank comes on the top, and they also given almost equal weightage of around 10% each. So in the earlier company, earlier this one ITC was there in somewhat top, and now it is actually in the almost like bottom. They are invested only ITC 2.39%. Yeah, this is Aditya Birla, and next one is ICICI Prudential Blue Chip Fund. So here also number of stock is 72, and again the financial sector has got more weightage, followed by energy and technology and automobile. So yeah, the number of top companies here you can see HDFC's has been given less weightage here by ICICI Prudential Fund Manager, and again ICICI Bank they've got more weightage, and also he has increased in the last quarter. And Larsen and Pro, yeah, this is actually they've reduced last quarter, but this is coming under second position, followed by Reliance, Infosys, and all. Yeah, and this is my last slide. As you can see, this is my recommendation. As I said, I'm not a SEBI registered analyst. Please take your own call after your research. So these are all the factors what I consider to recommend these. So the first is the what is the returns of these funds in last 10 years as on date. So this date is also very very important. When the market is in the top, the returns looks good. When there is a market is fully down, that time the returns may vary here and there 1 or 2%. As I was saying earlier in the first video, the expectation should be 12 to 15%. As you can see, even though it's being in big companies, if you these companies where they've invested, they are kind of a not large cap. Also you can say they are joint caps like 5 lakh crores, 10 lakh crores, that kind of companies. In spite of that, they have really achieved very good returns, and this is one of the thing. And in the category wise, this is the average category returns. The equity large cap category has given this much returns. You can compare here. Out of these all these five, I think Mira Asset large cap fund has given very very good returns of 17.44, followed by the expense ratio 0.56% only. So the next one is blue chip. So this has also given the best returns here. So 0.88%. 0.88 is the expense ratio you need to pay. So this is the AUM what I was talking about. So asset under management. So they are managing this much of crores. It's almost like more than 20,000 crores each fund is managing. So considering all these uh, ratios as well as the expense ratio, uh, I would recommend to invest in Mira Asset large cap fund if you're if you are very much convinced about this mutual fund house, followed by SBI blue chip fund. So these ratios, the expense ratios very very less. This will give you a long term advantage. So it's almost like half. The Mira is charging only half, since it is a large cap fund. So mainly they will only invest in out of these 274 companies, and they will not you know shuffle too much. They try to keep as it is, because these companies, large cap companies, usually they will anyway give around 15 to 20% returns. Sometimes, I mean, sometimes there could be again negative returns based on different circumstances. Otherwise, they will believe on this kind of passive investing. That's why they will give uh, consistent returns. Yeah, that's it for today. Please subscribe to my channel, as well as you can also refer to your friends, and see you next video. Thank you all again. Bye.